Hello and welcome to this week's Elite webinar. I'm Riz, bringing you all the market insights, my thoughts, no nonsense, no BS, and straight to the point. So let's kick things off. It's been a pretty muted week in the market from a catalyst standpoint, from even a price action standpoint. We had some indecisive moves, market consolidating at least the last 3 days of the week, Wednesday, Thursday, and Friday. Not the most bullish candles, obviously, as you can see, but very much to be expected and the norm. You can't just have a straight line up, right? So it's been, like I said, a bit of a muted week. You can see the RSI even kind of just moving flat here. We're getting closer and closer to the big catalyst or big event here. Obviously, today we're recording this, doing this webinar is the 26th, and we are in the final stretch, ladies and gentlemen, to the U.S. federal election. So that will be very interesting. But as I mentioned last webinar, if you didn't catch that yet, um, the market has been pricing in a Trump presidency, and it's a lot of it is, I would say, there's no hard data. Like, where no one's like buying or shorting the market or different stocks and then inputting who they're voting for, right? This is based on sentiment, based on price action, and just overall having traded through a few presidential elections, you get an idea as to what the market is kind of pointing towards. And same thing with other asset classes in a way as well. Is it a given? Is it guaranteed? Absolutely not. That's just the way the market's kind of looking right now. But moving on to we got the sectors, right? To bring it to year to date, we got the sectors here. You can see the S&P 500 moving a bit sideways here for the last few days, and everything is just kind of scrunched up here now. We've got communications, utilities, financials, and tech and the SPY all just scrunched here, whereas everything else still continuing to kind of underperform. But we've got tech making a big comeback, with some of the semis coming recovering and hitting Nvidia, for example, just right back up their new highs. We got financials taking a little bit of a dip, but other than that, utilities coming down as well. But everything else from other sectors, you got the real estate, you got the XLV, which is your healthcare, energy, of course, and XLP, which is your consumer staples and consumer discretionary, all underperforming. Green on the year, but underperforming nonetheless. Okay. Uh, Coming into oil also kind of consolidating, held above that 67 area of support. And then, we're just kind of moving here. We do have a little bit more of geopolitical tensions in the Middle East between Israel and Iran. Just yesterday, uh, there was another strike. Israel did another strike on Iran. So there's more to play for from a geopolitical standpoint, from the unrest and unease in the Middle East continues. Um, you know, uh, but here we are with oil, right? Kind of still moving sideways. It doesn't mean, just because there's some tensions in the Middle East and that oil is just gonna keep going. It's never a given. But usually we do see oil trend a little bit higher or trade a little bit higher generally during geopolitical instability, especially in the Middle East. So not really played out this year so far, right? Moving on to gold, continuing to move higher. If you recall, I said, it took a little bit of a dip last week, but right back, to end the week, just pretty much another all-time high, right? So when you look at this kind of chart, it's just extraordinary, right? It's just extraordinary here. Where are we at year to date on gold? Just fun to see the performance year to date for this thing, roughly. Hmm. Yeah, 35%. That That's one of the best years in gold ever. I don't know, don't quote me on it, but um I don't know if I've seen gold have this stellar of a year, I think in all my trading years. So since 2008 to now, I don't think I've ever seen gold have this kind of move. So it's extraordinary. Um, I would not bet against this. I would not short this. I'm not a buyer at these levels either, but I would not short this. Absolutely. Okay. So just be mindful of that. Let it do its thing. As I've said for multiple webinars consecutively, the markets are giving, and I don't mean just the stock market. I mean different markets, bond markets. We've got the oil commodity markets. We've got gold, all kind of flashing different signals, but it doesn't really matter much because still keeps going up. Uh, Bond yields. This one also giving us another signal, right? We've got the yield going up even now, even though, so to give you an idea, last week Canada did another 50 basis point hike. Sorry, cut. Correction, cut. Okay. So that's two 50 basis point cuts this year, right? Now, US on the other hand has only done one 50 basis point cut so far. So they are a bit behind, so to speak. And I know Canada doesn't really matter, but generally speaking, the two countries do kind of, I don't want to say cut or raise in tandem, but they're kind of similar in their cutting and raising cycles. So, maybe we can expect in the next Fed meeting another cut. Now, how big of a cut? That's what the issue here is with the solid macro data that's come out the past few weeks. The market, as you can see, the bond market is effectively foreshadowing that the next cut will be a smaller cut, so to speak. But we don't know that for certain, but that's what the bond market's feeling, right? As it continues to go up. Um, Now, with that said, US dollar also continuing to rise, right? Come back to those 2024 kind of like key area back again. Before you could say it was like, trending down, but this is right back to kind of the consolidation area and the average area of 2024. So right back there again. So that's also giving us an idea that, okay, the foreign exchange currency markets also giving us a clue as to maybe we're going to see a rate cut in the US, but a little bit smaller than expected. Okay. Now let's move on to what do we got here? Do we do the yeah, we'll do the earnings first. Okay. All right. So we are now in the peak week of earnings. Okay, this is the big one. As you can see, packed, super packed schedule. This is kind of like the week to play for when it comes to earnings, um, this coming week. So, we have a lot of big companies, but, specifically we got Ford, if you like your American automotive uh, stocks and companies. We got PayPal, one of our black sheep here in Elite. We got BP Oil, right? Oil company. We got McDonald's, obviously big I would say headlines, with recently a lot of exposure with Trump kind of doing a photo op there and serving a couple people fries and whatnot. We also had shortly after some news of E. coli outbreak at some of their locations and due to the beef, I believe, and it's I think resulted in one death, perhaps so far that we know of, and this is reminiscent of what happened a few years ago with CMG Chipotle, right? Chipotle Mexican Grill. This happened a few years back where the stock just got decimated, and granted, this is not the same type of uh, I would say enormity, the enormity of the E. coli outbreak isn't as big or as bad as it was for Chipotle a few years ago. They had to shut down so many restaurants. They had to do literally. take days off of having the restaurants open so that staff could be educated on food handling and all that. So like it was bad. It was really bad. And I think if you guys remind me, we can take a look at that time on the chart. But we got Pfizer, airlines, JetBlue, and if you like your cruises, Royal Caribbean, if you like your shoes with holes, as Chris probably would have said, you got Crocs. Okay. Um, we got Visa, again, CMG, Chipotle conveniently reporting the same day as McDonald's, but after the close, we got Snap, Snapchat, Alphabet, Google, right? AMD, obviously everyone's second favorite semiconductor, right? Um, we also have Visa and Reddit here as well. But continuing into Wednesday open, we got Eli Lilly, big, solid pharmaceutical company, Caterpillar for the industrial, manufacturing side. And we got Humana, another healthcare insurance type of company, healthcare insurance, healthcare, healthcare insurance, is that the right word? I don't know. But they've been hammered. The past few weeks as well, big drops. And then we have coming into, solar here, but we got Microsoft, Meta, Facebook, the two big ones here on Wednesday after close, right? Coinbase for those of you that are into crypto, Robinhood as an exchange, as a shitty brokerage, I mean, not an exchange, and then Etsy and Roku here as well. Starbucks as well, also reporting. Um, We've got a big CEO change. They released some of their numbers preliminarily. It's like just ahead of the curve, just to guide. Think of it like pre-guidance um, uh, last week. But their official earnings are this Wednesday after close. We got Uber, Peloton, your friendly neighborhood stationary bike with the iPad stuck on it. Absolute dog shit company. But anyways, we got Merck, which is I believe this is the Merck. Yeah, we got the pharmaceutical Merck. There's a Merck that's for what's it called? Logistics as well, but ConocoPhillips Oil, right? Altria is the company that owns Philip Morris and all that stuff for tobacco cigarettes, right? You got MasterCard, obviously, a couple 2 days after day after Visa. Kellanova is actually Kellogg's, right? Rebranded here. And then for cereal, and you got Estee Lauder companies. Norwegian Cruise Lines is also 2 days after Royal Caribbean Cruise Lines, which is their direct competitor. And then Thursday, you got another two big dogs. You got Amazon and Apple, right? Intel, the former chipset semiconductor type of leader, but obviously floundering and a former shell of itself. And then you got Chevron, Exxon, the big what's it called? Energy, oil producers, retailers as well here in North America. But other than that, Air Canada, if you care about airlines, Canadian airline. But other than that, it's a big, big week. Plenty to play for, plenty of things to watch and pay attention to, depending on, what you find interest in or what you hold or what you're planning on potentially trading. Again, I will keep everyone in Elite up to task, up to date on kind of what I'm seeing, what I'm kind of potentially looking to trade. As you know, I'm not one to trade for the hell of it or go in and just wing out to trade just for the sake of it, right? So I will be paying attention to see what suits my trading style and from an opportunity standpoint post earnings, and then we'll go from there. Last but not least, we have our economic, macroeconomic data calendar here. We got a little bit of stuff this week, right? We got job openings. It's first thing Tuesday morning. Looking at kind of a little bit lower than the previous report. We got the growth rate, GDP growth rate. This is against the advanced number, right? For Q3, not the final. So this is expecting 3%, 3.3%, uh, you know, average, okay, for the annual. Um, Now we got sorry, growth rate quarter over quarter. Okay, so we got PCE. I'm not too big on PCE, not a big deal, but personal income, personal spending, this will be important to see how last month the average U.S. consumer was doing from a spending and income standpoint. We got non-farm payrolls, right, for this month. We got that's big, right? That's big on Friday morning. Unemployment's another big one, right? So we're gonna see how that goes. Expecting unemployment to be slightly above um, previous numbers. Let's see. But so far, so good. Unemployment's really good. Payroll numbers have been good. Job openings have been good. We've had the growth rate be decent. So all these things overall, when I mentioned the economic machine is strong, and the market's chugged along, and we're really in that soft landing type of narrative playing out so far for now. And that's why, right? Because we've seen a lot of the catalysts, these economic data come out, and they're pretty good. Hence why, perhaps we might see a smaller rate cut than initially anticipated. Okay, so let's flip back here to the chart. Let's take some questions. Um, yeah, it's correction. Maybe the E. coli could be also in the chat here. One of our members, perhaps E. coli could be linked to the onions. So yeah, maybe that's the case too. I read somewhere it could be the beef, but obviously you know how it is, right? With kind of the news coming out as it develops. So a couple of questions we got here. Jeffrey has a question on Starbucks. Let's bring up Starbucks. They have earnings as well. Uh, Here's a question on the pre-release of the actual earnings release, and are currently long. It's currently long on the stock. So question is, with the official earnings release coming out, would you expect the move to be similar to a normal earnings move, or less information has been largely priced in? Yeah, so I think the information's predominantly been priced in, unless they come in with something, I would say, extremely different to what they've already said. I think that most of it's priced in. We also have to be aware that there's that earnings call, right? The earnings call will be important. Um, and this is why Jeffrey thought that they had released earnings already, because they released the preliminary numbers. Um, but in fact, it's actually this week. Okay. But yeah, I think it's priced in. I think the earnings catalyst is pretty much, you could say it's done. Uh, they have that new CEO. A lot has changed. The reason I think they came in with the preliminary is because the new CEO, um, I can't remember his first name, but I think his last name is Nichols, uh, and he essentially is doing a big shift and change. So he probably wanted to come in ahead of the curve and set the expectation that, look, the expectation is to not have any expectations, so to speak. And that's probably why they went ahead a schedule and kind of warm and soften up people what to expect, instead of dropping the hammer, so to speak, the day of, and then having the market react a little bit more unexpectedly to it. Okay. As far as your long position, yeah, I think it's holding up. The fact that it continues to consolidate here with this, you want to call it a quadruple top here, around the 99 area, maybe triple top, depending on how you see it, uh, is something that I'm kind of concerned about. But other than that, it is consolidating after the news of the new CEO announcement. It's holding up, so that's good. Then it all comes down to, obviously, the execution on their part. We have a question from Jazz, MU, right? This is a stock we know and love and have traded often. Looking to re-enter here, he says, well, yeah, it's right at that 200-day moving average. Kind of hard to see, but it's right there, right at that 200-day moving average, right? Of course, clear of the 50-day moving average, kind of moving up in that kind of uptrend now the past 2 months, if you take a look at it. Not a bad setup, not a bad setup for long. My only concern is with semis making a big recovery. There's obviously been a weaker semiconductor play compared to things like Nvidia, obviously, and wrong stock. Sorry, there we go. Compared to something like Nvidia, which you just obviously been running and pretty much near all-time highs. We also have an AMD, which reports, and they've also. had low relative strength and consolidating here. So not a bad setup. I personally think AMD is a little bit of a better setup, but the thing is they have earnings, right? But you can't really go wrong with either if you are bullish on semiconductors, especially these names that haven't really kept up with NVIDIA, so to speak. Obviously, NVIDIA is a powerhouse juggernaut, the big daddy of them all, especially when it comes to, the chipsets and the deliveries and orders from big tech, whether it's Meta, Microsoft, Tesla, all that, simply due to the AI and cloud and server shift that has happened over the past few years. So they're one of the biggest benefactors of that, more so than any other semiconductor company, right? So that's my thoughts on that. Any other questions? I think there's a lot to play for. We got, Microsoft, just a quick rundown. There's Microsoft, you got Apple, look at that, right? Near highs. You got Amazon consolidating here. So yeah, we've got the big names. You got Meta, which has been an absolute tear and consolidating, but it's very much near all-time highs. A tremendous, tremendous growth, right? Ever since we saw that downtrend back in 2022, tremendous rise here uh, as we head into its earnings, right? So a lot of the big tech is set up pretty well from a price standpoint, from a valuation standpoint. Some of them are a bit, long in the tooth. I don't want to say they're completely overvalued, but they're a little bit long in the tooth. We're, in my opinion, um, there's less margin of safety, less aggressive upside. Um, as a lot of the things have become priced in over the last few months in the year, right? When it comes to earnings, uh, the rate cut scenario and catalyst have also played out, and we're kind of in the thick of it. And then we are definitely into the last couple months of the year, and yeah, it's pretty interesting. Any other questions? We got another one. Yeah, it's WMT, Costco, Walmart are just shooting for the moon. See, even you have, and that's a good point, right? Jazz making a good point. You have even consumer staples, some of the consumer staples, consumer discretionary stocks. You have some of the retail, right? These are all just up there, just running. And like, I would not put Walmart here. Like it's Walmart, like like great company. But I would not buy them here with their financials, not their financials, their fundamental, just the way the price is, just the valuations. Like it's heavy. Like it's very much, in my opinion, like look at the PE, right? Like a 43 earnings multiple. That's hefty. That's a lot, right? And it's not something that I'm thrilled with getting, especially when you look at the technicals. Bringing up Costco, same thing. Like, look at this thing. Massive, massive run this year. This is another obviously amazing company, but look at the PE, right? 55, you know, earnings multiple is 55, PE ratio of 55. Insane. This is like stuff that you would expect from tech, right? Things you should expect from, like, if I bring up like Microsoft, right? Look at Microsoft's PE ratio, earnings multiple, right? Look at Amazon. Amazon's going to be high, but right, 44, right? Look at Apple, 35. See what I'm saying? Like you got things like Walmart, right? Costco trading in the high 30s, mid 40s. Like, come on, that is food. That just No, no, I would not be buying those, right? So the question is, he asked, not either where we want to enter or go short, of course, but what to expect in the coming months for this sector. This sector is overdone. I would expect, depending on, you know, the next month, how they play out, how the election plays out, what the Fed does, I do expect a little bit more of a downside, right? It's not sustainable for them to keep on going up. I would expect a little bit of a pullback, right? Am I saying they're gonna come back down to like for Costco, like is it going to come down back down to 80 right away? No, right? Like we got it consolidating here, the nearly the 900 area. If it does drop, it's not going to go one fell swoop all the way down to 800. It's not going to drop 10% right away back down to the 200-day moving average. Like, it might be a 5% pullback, over a few weeks. Um, that's what we're kind of looking at here. But right now, no, I am much more in the wait and see. I like to see pullbacks. I like to buy with more margin of safety. And what can happen in the future. No one knows for sure. But we can get an idea. Usually you have, healthy pullbacks, and that's normal. We've seen it even this year, right? In Costco, right? We've seen here, we've seen a little bit here, right? So it's not abnormal to see that. We just haven't got one since July, right? That's when the market also pulled back a bit as well. So let's see if we see something here in Costco and Walmart. Uh, Similar scenario, but no pullback since July, right? Just a straight parabolic lineup almost. So again, I'd wait to see for that, right? But overall, Walmart had a stellar year, just up and away for the entire year. Absolutely insane. Um, but with that said, MRK and GSK, their earning reports come out this week. But yeah, I'm holding those to give it a little bit away for those that are not in lead. But yes, I am holding those through earnings. Okay. Any last final questions before we wrap up? Solid questions, solid here, solid webinar. It's been great to have everyone here. But with that said, I think that's about it. So, um, fantastic. Thank you everyone for joining. And we shall convene on the next one. Keep in mind we got a couple weeks left till the election, so all to play for. All right. With that said, have a great rest of the day, rest of the week, and we'll catch you later. Ciao.